All right, I'm making this video to show you this powerful strategy, guys. I hope I'm audible enough because where I'm at is quite noisy. So I'm making this video because I just took some bucks out of the market. I took my sell around this region and I was out immediately after price came back to. I was supposed to be out here, but I guess I just took my chance because I knew the market was going to keep going down. All right, so I allowed it, and then this spike happened. But you can see that the spike did not really hurt me. It just took back some of my profit and then brought it back, and then I left the market just around this period. I didn't want to. I was doing something else where I was, right where I'm at. I'm still out here right now, so I was doing something different. I didn't want any distractions, right? I didn't want to be distracted. That's why I closed out with some profits, but you can see I was able to take up to 1 2 3 4 5 6 7 8 9 10 candlesticks. I left around this region. Okay, after this spike I left before this other spike. And then you can see that from my entry I'm still in profits. Had it been I left it, I'll still be in profit right now. The trade will still be running right now. But that's by the way. Let me show you guys the strategy. It works perfectly on the boom 1000 market, the crash 1000 market. I've also attempted it on the crash 900 market and it worked. So I'm hoping it will work on every other boom and crash market. But for now, I've only used it on the boom 1000, the crash 1000, and the crash 900 market. Yes, and it worked. So this strategy is effective. It's powerful. It's a combination of indicators that will give you a clue on the trend of the market at the moment, and then also some oscillators, of course, right? So we are using the RSI and the RVI indicators on our indicator window, and we're using moving average on the main chart. You guys know me, I love moving average. That is actually one of the best indicators that I really rely on if I have to trade using indicators. But I usually advise my people, my students, all right, anybody actually that seek advice, I like to tell them to learn to do without these indicators. Okay, that's why I call these strategies the lazy strategy for lazy people. All right, I don't say that to make anybody look lazy, but just to encourage you to actually go further and try to get more knowledge on doing it without these indicators. Price action is actually going to give you sustainable profit, and you it will become more consistent than what you make using the indicators. Because like I always tell you guys, I like to be honest with you guys, the indicators are designed to actually just follow what the price is doing, right? Indicators are just following the price to give you a clue of what you should be doing or what you should be expecting or what where you should be going and all of that, right? But if you're able to analyze the market yourself, if you're able to look at the charts and interpret the candlesticks and all of that by yourself without these indicators, then you will realize that the indicators will even serve you better just by using it to confirm what you've already seen, confirm your analysis, confirm your bias or whatever you've seen that the market is doing. You've seen it with your eyes already. You should be able to use it to confirm it. Okay, so basically this strategy is going to show you the trend, like I said, show you areas where there will be buying pressure or selling pressure. And for this video, we are selling the boom 1000. That means we are scalping. Okay, we are scalping the boom 1000. I'm probably going to make a video on how to catch spikes. How to catch spikes using this same strategy, because one of the attempts that I made, I caught spikes with it. I think that was on was it the crash market, either the crash or the crash 1000 market, either the crash 1000 or crash 900 market. I caught spikes with it. I did not use it to scalp, I used it to catch spikes, and it worked effectively. So I'm going to make another video to explain that, but for now we are going to be learning how to. You can see it's still going in profit, guys. You can see, like I said, this was my entry, and then see where we're at right now. Had it been I left it, had it been I had the time and I left it, will still be I'll still be counting my profit right now. But I just didn't want to be looking at my phone while I was with the person I was with. I was with somebody I placed at high esteem, so I just needed to accord him the respect and not be pressing my phone while talking to him. All right. So let's quickly just go into showing you guys the setup of these indicators before I get to explain the ways to use it, what to expect, right? Conditions that you want to see in the market that would prompt you an entry or would give you a hint that the market is going to be that the market is ready to go your direction. So first of all, we need the moving average on the main window. We need relative strength index. We need relative vigor index. All right, moving average on the main window. So this is the properties, period 35, shift 0, method exponential, apply to close. Levels are not needed, so you simply just leave that empty. Visualization, you need to leave it at all time frames. For styling, you can use whatever color that you want to use, but make sure it's visible on your charts. Ensure that it's visible on your charts. Okay, so you want to click done when you're done with that, and you will have the moving average appear on your main chart. That's it. All right, that's it. The blue line on the main chart is the moving average. Wow, I should have left this market to keep running. Probably just set my target, but of course I was just testing. I was still just testing out, just back testing, and just trying to see if it was going to really pay off. All right, probably if I was in my space, if I was trading in my comfort zone, I would have left it to be in profit. By now I would see more profit. So the next indicator would be the relative strength index with the following properties. Remember that this is going to create an indicator window for you, and the indicator window is where you're going to be adding the second indicator to, right? The relative vigor index is where you're going to be adding it to the indicator window that is going to be created as soon as you add your relative strength index. Both of them are oscillators. I'm sure you guys know what oscillators do. All right, so for relative strength index properties, we want to leave it at period 1, apply to close. Levels should be 20 and 80, right? To just put that in here, 80 and 20, 80 and 20. And then for the levels, you can decide to use whatever color, but make sure it's visible in your charts. Make sure it's visible on your charts. All right, for me, I'm using black. That's why you see 2 black lines on my chart. But for this other place, for the visualization area, the style should be the same color as the background of your chart, please. Very important, the same color as the background of your chart. So if you are using the dark background, you want to use black color. If you are using the white background, just like myself here, you want to be using the white color. Okay, so you click done, and you will have your moving up your relative strength index levels, which is the 2 black lines pointed up and below. All right, you can see level 80. This is level 80. All right, and you can also see level 20. This is level 20. Now these levels are more or less showing you the areas where there will be buying pressure and selling pressure, right? Level 80 is giving you the area where there will be more selling pressure in the market, which is otherwise known as the resistance region, the overbought region. And then the level 20 is the oversold region, the support region, the areas where there is usually buying pressure in the market. All right, now how do we utilize this strategy to make profits? All right, how do we make profits using this strategy? You can see it's still in profit, guys. It's still in profit, still in massive profit. So how do we actually just make profits using this strategy? Now, one thing you need to be sure of is the direction of the market. If you can do that without the use of this indicator, you can just go to a higher time frame and just look at it and see if there is a downtrend, there's a trending market, the market is moving in your direction and it's trending downwards. Now pay attention to this. This is actually for the boom market. Whatever boom you want to trade on, be it 1000, be it 500, whatever boom market you want to trade on, you want to be selling to scalp, to catch some candlesticks and leave. You're avoiding spikes at this time. Okay, so obviously we can see that on the 30 minutes time frame, the market has been showing off much selling pressure than buying pressure in the market. You can see clearly that the sellers are dominating on the 30 minutes. Let's see the 1 hour. The same thing. The 1 hour has been pushing downwards. All right, let's see 4 hours. The same thing. 4 hours has been selling for God knows how long, right? And it's close to support, so one should be careful. One should be careful around this region, around this entire area. All right, but then if you don't know how to how to identify the trend by just looking at it, that means you need to learn price action. It's quite affordable with my team. You can join us. It's quite affordable. You can reach out to me on the number that is going to be in the description of this video and be a part of my class. I teach my students to trade or to be able to analyze the market without these indicators, so that after you are done analyzing, you now use your indicators to confirm what you've seen. And of course, you know what that means. Confluences, more confirmations and all of that makes your analysis more secure, more solid, more confident. Yes, that's the word. All right, so having seen that the market has been pushing downwards on the 4 hours time frame is enough reason to want to sell. Right, now let's go back to the lower time frame. And then now, for those of you who don't really know how to interpret the candlesticks and see the direction, the charts, the candlestick patterns, and see the market structure and all of that, you want to see that there is not a time that this moving average line on your chart has been broken, and you see that you need to observe that whenever price comes to your moving average, it bounces back down from there, right? It bounces back down from there. All right, so all you need to do is wait for price to come back to it, right? Wait for price to come back to it. Like right now, you don't need to trade anyhow. Right now, you don't need to enter a trade right now until you see that price has come back into your moving average area. And then if it doesn't break out, a great deal, yeah, might be a fake out like this, like what happened here, right? But if it breaks out a bit and then starts selling it back inside the region, then that's your chance. All right, unless you see an actual breakout, a significant breakout, right, then that's when you should avoid it. But as long as the market keeps respecting the moving average, all right, as long as you can see this other area, it was more of the bullish momentum in the market, right? The moving average was more or less below. Look at this here, it was like below the candlesticks, but you want to see it above the candlesticks. You want to see that the price candlesticks is moving under the moving average. That's the best way I can explain it in a layman term, right? Now, if you've seen that happen, the next thing you want to do is check your indicator window. All right, check where you have your indicator window. There's an object I want to use. Let's use this guy. So, oh no, that's not what I want. Oh, sorry about that. Okay, so I'm just going to take that out. Now, there's a tool I'm looking for to use to really explain this thing. Okay, I'll just go with the arrows. Okay, so eventually you see price, you see this green and red line around this region, right? Your relative vigor indicator, once you see them come to the level 80, remember I told you guys that the level 80 here is the overbought region, the resistance region, where you find selling pressure, right? Where you find selling pressure in the market. Now when you see that these two lines are around that region and they are selling, they are going down, I mean they are tilting to the downside from that region, that means they've crossed themselves around this region and they are tilting downside, they are tilting downwards, I mean, then that's another signal that is telling you that price has come to a somewhat resistance region and is tilting to the downside. So you put all of these confirmations together, the fact that the trend was downwards, the fact that your moving average is telling you that price is pushing to the downside, all right, the fact that you have seen these two guys converge around level 80, which is the overbought region, which is the resistance zone, and then they are now pushing towards the downside from there. And then you put all of these confirmations together and then you wait for price to come below. Remember I said you should allow price to, let's say there's a spike into this moving average, you need to wait for a reversal from that area. Okay, wait for a reversal, something like what we have here, all right. So wait for a reversal from that area and then allow one or two candlesticks to close successfully. By that time you would have seen a structure, a reversal structure around that base, around that area, just like what we have here. This is what I mean by reversal structure. All right, those swing highs is what you're looking for at that point. I probably wouldn't have traded this one because it was that broken out way too far. Even when it came back, that was the fake out. It came back into the area and then it continued selling. But I probably would have avoided the trade at this region. Okay, so I want to see that there is a spike. Right now, I'm waiting to see that there is a spike into this area. And then around the moving average here, even if it breaks out a bit, just like what happened here, right? Just like what happened here, even if it breaks out a bit from that region and then comes back, once it comes back, I want to see two candlesticks close below the moving average line, and then I want to take my chance. At that moment. I want to sell. All right, I want to sell and I want to leave the market at the immediate swing low, right? I want to leave the market at the immediate low. By that time I would have counted up to like 10 candlesticks, right? Like 10 up to like, let's see if the market should spike from here, for example, into this region. Let's say that's the region, right? And it starts selling back from that region. Let's see how many candlesticks we would have caught. Now notice that the market would have printed a reversal structure here. I'm actually just telling you guys how to exit the market or when to exit the market right now. So there would have been a reversal structure here. All right, so let's count together from this point: 1 2 3 4 5 6 7 8 9 10 11. That means I would have caught over 11 candlesticks and that would have given me massive profits. Now let's check to see if this works out, if this plays out. Remember every rule that I have explained. Okay, these areas price has been above the moving average. I remember that the boom 1000 market has been trending upwards for a while before it started selling. So I want to see areas where the moving average is actually above the price region. Okay, areas like this, right? Areas like this, you can see this is still an uptrend, kind of. Well, from here the market was already printing a downtrend. So anything I see around this area, whenever I see price close below the moving average, just like what I explained earlier, and then I see the converging of these two lines at the level 80. This is the RVI indicator. If I see them converge around the level 80, which is our overbought level, our resistance level, and then they start tilting downwards, that's when I'll be taking my shot, especially after there is two closing of the price or the candlesticks below the moving average. Okay, so if you keep checking, and remember to always go to a higher time frame if at all you understand how to interpret the candlestick patterns. Go back to higher time frames and see that what I explained has played out, and then you notice that your win cannot be stopped. You will not lose too much, right? Out of 10 trades, you probably just, if you lose, might just lose 3 or 4. You can see these are examples that I'm showing you guys. All right, it's playing out. It's playing out. It's playing out very well. Except for areas where price is tilting upwards, right? Remember to always ensure that your moving average is above and your candlesticks are below the moving average line. That is showing you that the market is going downward. So whatever it is, guys, just make sure to attempt this on a demo account. I always urge you guys to make sure that you practice this first before you get to apply it to your live account. And if you have challenges, guys, I'll leave my WhatsApp number in the description of this video so that you will reach out. You can also reach out to be a part of the VIP group where we share premium signals to beautiful people who are winning every single day. All right, also feel free to join the free Telegram group where you see how we do, see the trading results to motivate yourself and know that it is possible. You see other information that will help you grow as a trader. You know, just be there and join over 1,500 plus people that are on there. All right, so just do yourself that favor and be there. And also do me a favor to like this video. Please smash the like button. And if you have been benefiting from our past strategies, just make sure that you drop a good review for us, for others to also be motivated and do stuff. These things are possible, guys. A lot of people are making a lot of money off of this platform, and I don't know if you want to do yourself, it's just that's on you. But a lot of people are making it be, you know, trading and not worrying about the economy of our country.